Hi and welcome to this Blueberry Markets video update with me, 𝖺riև𝗂διЛ, head currency analyst. In this video, we're going to take a look at the week ahead, look at some news coming up as well as some charts of interest. So we're going to kick it off with the news. I'm actually just going to talk a little bit about some past data because over the weekend we've seen that US President Joe Biden has signed the debt ceiling bill, raising the limit and effectively staving off that potential default. This will spark some relief among investors, and we'll probably see a little bit more of that sort of risk on sort of environment potentially from this. However, we have seen some interesting developments on Friday. We saw the NFP data come in relatively strong. We saw it come in above expectations, above the previous 294k. It came in at 339k, and this sort of persistent strength in the labour market is going to put pressure on the Fed to further tighten its monetary policy. Now, we did see the Fed Watch tool rise to 75%, so that's suggesting that there's a 75% chance that the Fed will hike rates again by at least 25 basis points, and that was after this news. Now, we do that suggests maybe that the dollar's going to get stronger again this week, as a potential hike could force investors into buying the dollar. But in terms of dollar news this week, we're relatively light, although we do have the ISM Services PMI data as well as the unemployment claims this week. But the market may focus some of its attention elsewhere as well. We do have interest rate decisions from the RBA, who are expected to hold at 3.85%, despite the fact that inflation rates are still exceeding the target range. So that's quite an interesting setup there. We may see the RBA pause rates this meeting, but in the next meeting hike rates. So it'll be interesting to see what happens, especially in the RBA Governor Lowe speaking. It'll be interesting to see what the RBA Governor has to say there. We also have the Bank of Canada rate decision as well. Bank of Canada expected to hold rates also, but at 4.5%. Now, this one may be a little bit more of a shock that the Bank of Canada are holding rates at 4.5%, because we did have some strong Q1 GDP figures which outperformed the Bank of Canada's expectation, and we also had stronger CPI. We also saw that April's job data actually had an upswing, and unemployment remained pretty steady at 5%. So to see the Bank of Canada hold here might actually be a little bit of a surprise. Bank of Canada, out of the RBA and the Bank of Canada, have more of a reason to hike right now. We may see a shock number here, but we'll have to wait and see. If we do get a shock, then CAD could be one to watch going into this week. Looking at the strength meter then, not too much change, to be honest, from previous. We've seen a lot of markets just kind of remain the same. Euro is now in a potential reversal zone at -5, pound in the reversal zone at 5. We were looking at euro pound quite often this week, so that market could potentially continue to move lower or could reverse, being in that reversal zone, so that could be one to watch. You've also got CAD remaining at +5 as well, but that could continue to remain that way depending on how this Bank of Canada statement goes. Looking at the US dollar index then, so still looking for the move to the 105 handle. I think that's definitely on now. We looked at this short-term weakness here, and we were talking about seeing price come back into previous structure points. Price did come back into the 103.50 handle. It did then start to push back to the upside here after those NFP numbers. So if the labour market's going to remain strong, maybe we'll see a short-term pullback and then a continuation up to that 105. That's where we're expecting price to potentially find a little bit of a top in the market. Alternatively, if we try and get back into this area here and we fail, then price may continue lower from that point, but we'll have to wait and see there. I think 105 could be the point of resistance for the US dollar index. That brings me to the dollar yen, because I like the idea that if the US dollar index is going to move higher, dollar yen will follow a similar path into the 142. Nice strong bullish close on Friday. Could see expectations of a move up to 142 this week, and looking to see if there's any opportunities for us there. Pound US dollar then is going to be an interesting market to watch. We actually broke out of this bullish channel. We then came into the bullish channel as resistance, and also the previous horizontal highs around about the 1.2550 handle, and we saw quite an aggressive rejection at that point. So pound US dollar downside could be highly likely with a move back down into the 1.2350s, even beyond that to the 1.22 handle. Finally then, on gold, we actually looked for a very short-term long gold position back into these highs. So managed to take a small chunk out of gold there. Then we've had this aggressive selling coming in from the NFP data, from that strong dollar. If that continues, I think gold prices are going to head towards the 1890 handle there, where we may start to see a rally from that market. But dollar looking fairly strong at the moment. Will that continue this week? That's going to be the question we need to ask ourselves, and that's going to be our focus with some markets going into this trading week. I hope you enjoyed this video update. If you did, please leave this video a like. Subscribe to the YouTube channel if you're not subscribed already, and I'll speak to you later this week. Thank you.